is that markets are forward looking. And so what we're seeing here is people are allocating to an asset that they believe is going to go up in the future, obviously. Things that will drive that are the Bitcoin ETF. But as people are allocating to this, 70% of the circulating supply of Bitcoin has not moved in a year. The reason why that's important is this is an $800 billion asset that has gone up 150% over the last 12 months. So when an asset goes up 150%, you would expect people to sell into the strength, kind of take profits.
So this move is really built on this anticipation of an ETF, probably January 5th to January 10th. So as it gets higher, as a trader, of course, I'm going to get a little scared because you're saying how much of that is already priced in.
Let's talk crypto right now, and let's talk Bitcoin specifically. $42,000. What do you ascribe the move to?
Yeah, Bitcoin is a free market asset, and I think one of the things people forget in finance is that markets are forward-looking. And so what we're seeing here is people are allocating to an asset that they believe is going to go up in the future, obviously. Things that will drive that are the Bitcoin ETF, but as people are allocating to this, 70% of the circulating supply of Bitcoin has not moved in a year. The reason why that's important is this is an $800 billion asset that has gone up 150% over the last 12 months. So when an asset goes up 150%, you would expect people to sell into the strength, kind of take profits. That's not happening. And so Bitcoiners are not selling that Bitcoin. They're not going to sell it to Wall Street. And so Wall Street's going to have to continue to bid up the price in order to
that share issue. So the 70%, that has not changed, not just this past year. But by the way, that has not changed, I don't think, for many, many years.
It's always been very high. 70% is the all-time high, so it's been creeping up, which has this reflexive kind of feedback loop, right? So if more people won't sell and price goes up, then price continues to go up even more rapidly.
Okay, the other 30% that is moving.
Yes.
Do you think that, I mean, I don't know if you can look through some of the numbers. Are those new buyers? Are those the old buyers who owned the original 70% saying, I want more? What is that?
So it's interesting when you look at the data. It's a little bit of everything, right? There's definitely more accumulation happening. So people who already had Bitcoin are continuing to buy more Bitcoin. An interesting statistic is if you dollar cost average every single day with $10 from January 1st until now, you're up 100%. So with all the boom, the bust, everything in between, a Bitcoin analyst, Dylan LeClaire, pointed out, you're up 100%. So just dollar cost averaging alone gave you a great return. Now, there's also this net new wave of capital coming in. So you have the institutions, but also you have a bunch of people sitting on the sidelines saying, well, if BlackRock wants Bitcoin, maybe I should buy some as well. And so that net new capital is definitely starting to come in, but I don't think we're actually going to see it until the gun goes off.
Okay, but the real move, I think, seemed to happen as a function of this idea that the Federal Reserve, the new wisdom, whether it's conventional or otherwise, or right even, is that they're going to ultimately have to turn things around and lower interest rates sometime in 2024. Is that what you ascribe? I mean, there was the ETF piece, and everyone said, oh, over here, it's the ETF piece. And now everyone says, oh, no, it's actually this.
Markets are forward-looking, and if you go back to 2021, Bitcoin started to fall as soon as the Fed started talking about we are going to cut rates. And so people were like, oh, wait a second, inflation is high in the summer of 2022. Why is Bitcoin falling? It's supposed to be this inflation hedge asset. But it was because Bitcoin and the holders saw what was going to happen. Same thing's happening right now. Bill Ackman's betting that interest rates are going to get cut in Q1. The market's pricing in 100% likelihood of an interest rate cut in Q2. Bitcoiners right now and people who want Bitcoin say it's going to happen even earlier.
What is the share right now internationally of ownership of Bitcoin? Meaning, is it predominantly in the United States? Is it predominantly in China? If you were to make a pie chart of the ownership on a globe, what would that look like?
So let's separate Bitcoin and hash rate. Hash rate, about 35% or so, is in the United States. When China banned mining, the United States was the big winner there. Ownership's a little bit harder because there's so many wallets that we don't know exactly geographically where they are. But you can see capital flows. The United States and Asia seem to really be driving a lot of the capital flows right now. The European region is actually a little bit behind and not allocating nearly as much. And so I think that America is going to be a big winner in the Bitcoin and cryptocurrency race. We see companies being built here. Coinbase being a fantastic example, up 330% over the last year to date. And what we've watched is regulators have stepped in and they basically are slapping the wrist of anyone who is not operating within the American financial system.
Michael Saylor, has had, I guess, down at 17,000. There were people that thought that he was going to get like a margin call or something. He's back now. I don't know how much he bought. Something like. How much?
He's got 174,000 Bitcoin. He's up $2 billion on it.
He made some weird comment the other day, and that was about what percentage of the global financial system, in his view, Bitcoin will represent at some point. And then he did some simple math and came out with some crazy number. What was it? I saw it.
There's all kinds of numbers that fly around.
But it was like 5 to 10 million per coin or something was what he came up with.
If Bitcoin just simply matches gold, it'd be $500,000. If it's
500,000 if it matched.
Just matches gold at $10 trillion. Now, if you continue to look at other assets it could eat into, if you have $1 today and you want to store wealth, you historically could have bought gold, you could have bought fine art, you could have bought all kinds of real estate, whatever.
Hard assets.
Young people are saying to themselves, I want to buy the hardest asset I can find, which tends to be Bitcoin. And it's liquid, and it is the best performing asset over the last 10 years.
But it's not but the Saylor question is how much of it becomes part of the quote-unquote financial system, and is he suggesting that there has to be a payments element or an actual transaction element?
But he was saying gold. You weren't saying a payment. If it became part of the payment system, it could be much bigger.
Well, but it also, if it became part of, this goes back to, can it really be part of the payment system and have and continue to increase? Because as we've discussed a million times, if it keeps increasing, nobody's ever going to use it.
Except there's that company we had on that uses just tiny little pieces of Bitcoin
here's what I would say. Whenever
to do it, and it doesn't matter the little minuscule variations on a daily basis.
Whenever I talk to someone in private and they ask me about Bitcoin, I tell them it's very simple. If you think that the Federal Reserve and other central banks are going to have to print capital or print money in order to finance all of this debt, then you're going to want to be in something other than dollars. And therefore,
you've got to get Andrew on board. You're still not on board.
Let's ask the baller. Longtime Fast Money friend Brian Kelly is back in the house. Can't get enough. Can't get enough of him either. Brian, welcome back.
Thank you.
So obviously you're long. You're very bullish.
Yes.
Has anything changed in terms of the trajectory of the move higher?
No, not really. I mean, certainly. So this move is really built on this anticipation of an ETF, probably January 5th to January 10th. So as it gets higher, as a trader, of course, I'm going to get a little scared because you're saying how much of that is already priced in. We're getting pretty close to that. But in terms of the longer-term trajectory for Bitcoin, I think you just have to think of it as we're in this, let's call it 1 to 2 year bull market period. We'll have these pullbacks. Even in 17, when we had a massive run, we had months that it was down 30, 40%. So you just have to keep that in mind.
So January 5th to 10th, it seems like it's all downside. It's like you have the sell the news or the disappointment. So how do you position into that?
I mean, I think you're long going into it, and then you start layering out of it as you get towards the end of the year. So let's call it over the next week or so. At least that's the strategy we're going to employ.
Okay, and then the reaction, in sympathy from the other coin. I mean, will there be a sympathy move too?
Yeah, so generally what we've seen in bull markets is about a month after Bitcoin moves, it starts to go to the altcoins. So we saw Ethereum break out last night, and then Solana, and then it starts to go down the list. And so that's what I would anticipate, let's call it January or so.
BK, good to have you here. Say hi to Brian, by the way. Yeah, a lot of this move has coincided or coincident with the fact that 5 rate cuts apparently are priced in for next year. Every time we pull them forward, Bitcoin seems to take a leg up. Is there any truth to that?
Yeah, I think it's a macro tailwind. We've been fighting the macro headwind for almost 2 years now, right? Rising rates, stronger dollar, all of that. The Fed's probably done. Europe has got a real problem on their hands. China's got a massive problem on their hands. And Japan is unlikely to tighten. So when I look at global liquidity, I think, yeah, sure, gold, Bitcoin, both of them are going to do well in this environment.
So, question about the halving. I've heard it called the halvening or the halving, but either one. We're getting to that in April, I think, right? Yep. And that's been a bullish thing before. I sort of wonder, is it the same thing, though? Is that already getting priced in, or is there something technical that actually happens that would make it be priced in closer to the event?
So, so what we've seen historically is that the 12 to 16 months after a halvening is the best performance of Bitcoin. So that's what everybody's thinking about. This time might be different because the price of Bitcoin's higher. We now only have, I think it's 900 Bitcoin a day that come out, so that gets cut in half. It's not a lot of Bitcoin, but what it does do is it makes Bitcoin more scarce than gold. So for the first time in history, you have an asset that is more scarce than gold.
In what way more scarce?
Let's call it a stock-to-flow ratio. So the amount of Bitcoin mined every year divided by the amount outstanding, same with gold. And now there'll be, quote-unquote, less Bitcoin than gold mined on a relative basis.